Right now, Americans carry over $1 trillion in credit card debt. But everyone around you is living like they're rich, because you are living inside the biggest financial illusion in history. An economy powered entirely by borrowed money. The car in your driveway is financed, and the phone in your pocket is leased. And the lifestyle you see online is mostly purchased with money that simply doesn't exist. You have been trained to believe that having access to credit is a sign of success. But credit is not a tool designed to help you build wealth. It is a meticulously engineered trap designed to extract your future labor. To the banking elite, you are not a customer. You are a yield-generating asset, a human crop waiting to be harvested. While you are fed images of endless prosperity, nearly 80% of the population is actually living paycheck to paycheck. You are operating one minor medical emergency or one missed paycheck away from total financial ruin. How did an entire society willingly sign up for indentured servitude? Decades ago, the financial equation for the middle class was simple, logical, and grounded in physical reality. If you wanted to buy something, you traded your time for wages, you saved that money, and then you purchased the item. Before the modern era, your financial reputation was based on your actual savings, your character, and your relationship with a local bank. Building wealth required patience, discipline, and the actual accumulation of hard capital. But the financial elite realized that your patience was extremely unprofitable for them. If people only bought what they could afford, corporate profits would be strictly limited by the actual wages of the working class. So, they engineered a solution to bypass reality entirely: the mass distribution of consumer credit. The true turning point occurred in 1978 with a Supreme Court ruling known as the Marquette decision. This ruling allowed national banks to export the highest possible interest rates from their home state to customers anywhere in the country. It effectively killed local usury laws and birthed the modern, predatory credit card behemoths. Then, in 1989, they introduced the ultimate psychological control mechanism, the FICO credit score. You have been conditioned to proudly monitor your credit score, believing it is a measure of your financial health. It is not. A high credit score does not mean you have a lot of money in the bank. A high credit score simply means you are highly profitable to financial institutions, and that you are obedient at servicing your debts. They launched trillion-dollar psychological marketing campaigns to convince you that waiting to buy something was an outdated concept. They taught you that it is perfectly normal to consume today by stealing the financial energy from your own future. They changed the entire conversation from "How much does this cost?" to "How much is the monthly payment?" By focusing your attention only on the monthly payment, they successfully blinded you to the true, devastating cost of the underlying asset. Nowhere is this psychological manipulation more evident than in the modern automobile industry. A vehicle used to be a basic mode of transportation, a depreciating asset that you aim to pay off as quickly as possible. Today, the average monthly payment for a new car has crossed the terrifying threshold of $1,000 a month. To hide this massive price inflation, the financial system simply changed the math. The average new car loan now stretches for an absurd 72, 84, and sometimes even 96 months. You are signing up for 8 years of paying high interest on a piece of machinery that loses value every single time the sun comes up. Millions of Americans are now trapped in massive negative equity, owing tens of thousands of dollars more than their vehicle is actually worth. When you try to trade the car in, the dealerships simply roll your negative balance into an even larger, more toxic loan for the next car. But the rabbit hole goes much deeper than just greedy dealerships. Just like the toxic mortgage-backed securities that triggered the 2008 housing collapse, Wall Street is now bundling your toxic car loans. They package these risky auto loans into massive financial derivatives known as asset-backed securities and sell them to global investors. They even install hidden GPS kill switches in subprime vehicles, allowing them to remotely shut down your engine the moment you miss a payment. The result is a silent epidemic of repossessions happening under the cover of darkness across the country. The financial institutions never cared if you could actually afford the $50,000 car. They only cared that they could securitize your debt, sell it for a massive premium, and leave you holding the explosive risk. But financing a luxury vehicle is merely a symptom of arrogance. The true horror lies in how you are now forced to finance your basic survival. As inflation rapidly eroded the purchasing power of your wages, the cost of living aggressively detached from reality. You have entered the final, most desperate stage of the consumer collapse. The era of buy now, pay later for daily necessities. When a society reaches the point where citizens are taking out microloans just to buy a pizza, groceries, or a tank of gas, that economy is mathematically dead. It is an economy operating in a silent depression, masked only by the artificial life support of endless consumer credit. Companies like Klarna, Affirm, and Afterpay have integrated seamlessly into every checkout screen on the internet. These tech companies use highly sophisticated, predatory algorithms designed entirely to bypass your logical brain. They gamify the concept of debt by breaking the total price into 4 easy payments, making it feel frictionless, modern, and entirely consequence-free. But this has created a terrifying macroeconomic blind spot known as phantom debt. Because many of these microloan companies do not report traditional data to credit bureaus, there are hundreds of billions of dollars in invisible debt floating in the economy. The Federal Reserve and the major banks cannot even track how deeply underwater the average consumer truly is. Before you even realize what has happened, your entire paycheck is mathematically obliterated by dozens of small, fragmented payments for things you have already consumed and digested. And sitting at the absolute apex of this predatory hierarchy is the ultimate wealth extraction weapon, the credit card interest rate. When the central banks aggressively raised interest rates to fight the inflation they themselves created, they quietly handed a loaded weapon to the credit card companies. The average credit card interest rate has skyrocketed to 24%, with many penalty rates reaching an extortionate 30%. Human beings are notoriously terrible at comprehending the devastating power of compound interest when it is actively working against them. In banking terminology, there is a specific, highly profitable phase of consumer debt known as the sweatbox. The sweatbox is the extended period of time where a struggling consumer is bleeding financially, but still desperately making minimum payments. During this phase, banks harvest billions of dollars in late fees, overdraft charges, and compounding penalty rates. They intentionally set your minimum payment mathematically low enough to keep you comfortable, but high enough to ensure your principal balance never actually goes down. Because interest is calculated on a daily periodic rate, every single day you carry a balance, they are quietly siphoning fractions of your wealth. If you make only the minimum payment on an average credit card balance, you will be paying off that single debt for over 20 years. You will end up paying 3 or 4 times the original purchase price entirely in pure interest. That interest does not create anything of value for society. It is simply a frictionless transfer of wealth from your exhausted hands directly into their corporate dividends. They do not need steel bars to build a prison. They only need to ensure you owe them more money than you can ever possibly repay. But every debt-based empire in history eventually reaches a mathematical breaking point. The data is screaming that the American consumer has finally hit a brick wall. Credit card delinquency rates, the percentage of people who have simply stopped paying their bills, are surging at the fastest pace since the 2008 financial crisis. Subprime auto loan defaults are hitting record highs, and millions of student loan borrowers are quietly refusing to resume their payments. Your credit limits are maxed out. Your savings have been entirely depleted, and the illusion of prosperity is rapidly evaporating. The middle class is intentionally being transformed into a permanent renter class, forced to subscribe to the very assets they used to own. The terrifying reality for the elite is that 70% of the United States economy is driven solely by your consumer spending. If you can no longer borrow money to buy things you cannot afford, their entire corporate revenue machine grinds to a devastating halt. Commercial real estate will crash because retail stores will die, simply because the consumer is tapped out. And when that collapse happens, the banking cartels will not take the loss. They will once again demand a multi-trillion-dollar bailout from the very taxpayers they just bankrupted. The system relies entirely on your financial ignorance and your desperate desire to look wealthy. The smart money understands that true wealth is not the car you drive or the clothes you wear. True wealth is owning your time, being completely debt-free, and accumulating hard, tangible assets outside of their fiat system. You can either continue funding their empire with your interest payments, or you can step off the treadmill and learn how the machine actually works. Subscribe to the Wealth Archives and learn the rules of the game before you become the casualty.